report, the 29th of August 2025. Right. Okay. Today I'm sharing about NVIDIA's earnings pullback and what it means to the AI trade. And by referring to the AI trade, the companies that have invested in AI. Okay, so what has NVIDIA got to do with these companies? That is what I'll be sharing today. Now, a quick look into NVIDIA's earnings. NVIDIA once again delivered a blockbuster quarter, surpassing Wall Street estimates on both the top and bottom lines. For its fiscal quarter 2 2026, the chipmaker posted revenue of 46.7 billion, up 56% year over year, and adjusted earnings per share of 1.05, topping consensus forecast of 46.1 billion and 1.01 respectively. Importantly, NVIDIA issued bullish guidance for the current quarter, projecting roughly 54 billion in revenue, ahead of analysts' 53.1 billion estimate. This upbeat outlook reinforced confidence that demand for NVIDIA's AI chips remain exceptionally strong. However, despite the beat and raise results, NVIDIA stock initially pulled back about 3.24% in after-hours trading. Now, such a reaction might seem puzzling given the headline numbers, but it reflects the sky-high expectations priced into the stock and some nuances within the earnings report, right? So, why the stock sank after good results? Three forces explain the after-hours drop even with solid numbers. First, expectations were extreme. NVIDIA has built a habit of smashing estimates. When the market is priced for perfection, a great result that is slightly shy of an internal whisper can look disappointing. The small undershoot in data center revenue gave Fast Money a reason to sell the news. Second, policy noise muddied the optics. Zero H20 shipments to China directly reduce what would have printed in data center sales. That is a rules issue, not a signal that customers are stepping back from AI build outs. Okay, so redirected inventory softened the hit, but did not fully replace it. So the reported mix looks softer than underlying demand. Third, history shows a post-earnings wobble is common. Across recent quarters, the stock often traded lower a week and a month after results, with the notable exception of Q1 2026. Q1 2026. Always remember one thing is that they will report 1 year earlier, so you have to move back 1 year for this, okay? So it's like 2025 Q1. The pattern says positioning and profit-taking drive the first reaction more than the changes in the long-term thesis. At a crowded shareholders base, and some investors will simply lock in gains into any ambiguity. Okay. Now, NVIDIA's role in AI. The NVIDIA is still the center of gravity in AI infrastructure. Its accelerators are the standard choice for training and increasingly for inference at scale. Years of investment in CUDA and other software tools have created a powerful ecosystem that keeps developers and enterprise building the NVIDIA's hardware and platform. The biggest cloud providers keep committing tens of billions each quarter to data center and AI spending, and a significant share of that flows towards NVIDIA hardware, plus networking and software. Now, because of its size and index weight, near 8% of the S&P 500, NVIDIA also acts as a market bellwether. Now, a strong or weak print can swing sentiments across semiconductors, cloud platforms, and application names. Okay. When investors ask whether the AI cycle is intact, they look first to NVIDIA's orders, product ramps, and guidance. So now you can see why NVIDIA is like the representative. You know, anything happen to NVIDIA, then you can affect the rest, because you know this point over here, the biggest clouds providers, as you know already who they are. Okay, Amazon is definitely one of them, right? Microsoft is one of them. So are they still committing tens of billions each quarter to data centers? If they are, then you know that this is still, NVIDIA is still going to do well. And not only that, that means AI is growing, and if they are not getting that income, no, that kind of profits, why would these big cloud providers keep on expanding their data centers, right? So these are the things, is like kind of information that we get in advance. That's why we call it the bellwether. So what the results mean for AI stocks, and whether there is room to move up. Now, this is a crucial thing that we need to know. Okay, we have seen the NVIDIA's results, earning results. So what does it mean to the AI stocks? And then can this AI stock still rise further? In the near term, the read-through is digestion rather than derailment. Okay. So I don't think that is means that the AI stock is going to come down already. It's more like they digest this and said, okay, things still look good, but what we're going to do next? But definitely not something that's going to show that let's sell AI stocks. Guidance points to ongoing strength, and the year-on-year growth in data center confirms that customers are still scaling AI clusters. Now, the China export restrictions make the number look weaker than they really were, creating short-term noise rather than a sign of slowing demand. That likely means NVIDIA and other AI stocks may trade sideways for a while, with higher volatility around headlines and investors becoming more selective about which AI names they buy. Now, there is still room for AI equities to advance from here, though the path is likely steep instead of straight climb. Here is the checklist on areas that matters most. Okay, so first, hyperscaler capex needs to remain firm. If cloud providers keep lifting budgets for AI infrastructure, the compute cycle extends and estimate risk stays to the upside. Company by company guidance over the next earnings round will be the key tell. Okay. Another factor is whether supply issue continues to ease. Right now, the industry face limits on things like memory chips, the what they call special packaging needs to make advanced processors, network capacity, and even the power for data centers. As those constraints improve, AI system can keep expanding. Okay. And more companies beyond NVIDIA stand to benefit. That could mean steadier growth for suppliers of memory, networking gear, power equipment, and cooling system, not just for the chip maker at the center of the story. Piece investors are watching is whether AI feature actually starts making money. The more proof that AI tools help companies raise revenue or cut costs, the more confident investors will have in paying up those businesses. That would give cloud platforms and specific AI applications a stronger second wave of growth, especially in areas like coding assistance, cybersecurity, marketing tools, and industry-focused co-pilots, where the benefits are easier to measure. Next, for the government rules are another factor that can swing results. Export restrictions can shift where and how much NVIDIA sells from quarter to quarter. As long as these rules stay manageable and don't turn into full bans, that won't derail the long-term AI story, though they can cause short-term ups and downs in the stock. Okay. So as a conclusion, to make things simple, NVIDIA's report tell investors that the AI capex cycle is intact even if quarter-to-quarter optics are noisy. For the stocks, that likely means a market that rewards evidence and punishes hype. Leaders like NVIDIA can resume the climb after consolidation if guidance remains firm and product transitions stay on track. Supplies that provide the parts currently in short supply, like memory, networking gears, and powerful systems, could keep gaining as their outlook become clearer. Now, could cloud platforms and software companies may also benefit once there's more evidence that AI features are directly generating revenue. For retail investors, the practical approach is to separate business momentum from post-earnings choreography. Sell the news air pockets in quality names as opportunities to upgrade position rather than as signals that the AI story has ended. And finally, use the checklist to judge whether there is still fuel in the tank. So the checklist I've already provided to you. Have a good look at it, and that's how you know that the possibilities of it. So with that, that's a report for today.